Welcome back. Now to get into the more interesting parts where we are actually putting together this understanding of structure that we've now got into a set of rules and applying them into the markets and forming setups. So this video is going to be on the analysis process for trending markets. So as you can see already anyway, if you're looking at the trading plan, if you're looking at the cheat sheets, which I'd hope you are, the first thing we do, step one, is open our chart and get 2 to 3 days of data on that chart. So this is Aussie dollar USD. We're starting from the morning of Wednesday, the 24th of May, and we need to get 2 to 3 days on the chart. So we'll start off by resetting just so that we don't have any sort of skewed scales like this that some people sometimes have, which affects how we do step one. So we'll start off by resetting the chart. You can do that by either double tapping the scale or double tapping this reset button here, or single tapping it, sorry. And then we'll get 2 to 3 days of data on the chart. So that means the current day and then 2 full days before that. So it's currently Wednesday, meaning I've got Wednesday morning and then all of Tuesday and all of Monday on the chart. So that is my 2 to 3 days of data. Now I need to know what the overall trend is. Is it an uptrend? Clearly not. Is it a clear downtrend? Potentially. And if not either of those, then it is sideways. For this one, it is somewhat trending, but if I'm not totally sure, I will class it as sideways. So knowing it's sideways, in this instance, we would then wait for 2 structure breaks in one direction. I'll go into that more both in, of course, the trading plan and in the analysis process for sideways markets. So that is what we currently have in the morning. But at this point, price is in a region where we don't have anything. It's not broken any structure anywhere. So I'm going to fast forward a little bit to see price actually break structure, which it has. But again, it's not coming back up. So we'll go a bit further ahead. Now, we have had price break structure. So let's actually look again and see if we are in a trend. And what do we have? By this point, price now looks far more like it is in a downtrend because price does start right in this top corner and is now ending right in this bottom corner with clearly a gradual trend of price. On top of that anyway, we have 2 breaks of structure, but for this one, we're going to judge this as a trending market to the downside in this case and see that we have got 1 structure break where price clearly pushes down and breaks this low in line with that overall downtrend. So because of that, we could have a setup. So we'll go and open our horizontal ray. We will place it at the candle closes of the broken structure. We will then look to the 5-minute for a deep test zone. As you'll remember from the deep test zone video, there are lots of regions where we could place the deep test zone on this chart. So we'll go simply for the start of the structural push. And from there, we have a setup. I would then create an alert. I can't because we're in replay mode, but I would then create an alert for around just below the level so that when price comes back up, it will alert me so I don't need to sit and watch. And that is all you need to do for finding a setup. It is as simple as that. We have judged the overall trend. We've then gone from knowing the overall trend to knowing how many structure breaks we need. Because it was a downtrend, we have 1 break in line with that trend. And there we go. We also do have 2 breaks in this case anyway. So in a sideways market, this would be good as well. But we do now have a setup. It is as simple as that. That is the analysis process for trending markets. I'll go into actually how to enter this exact setup in an entry video as well. But for now, I'm keeping this as just the analysis process. So we'll skip ahead to the next day now because we will have another chance to look or analyze a trending market then as well. So this is now the morning of Thursday, the 25th. As I said, I'll reset the scale. As you can see, we are reset already. I'll now get 2 to 3 days of data on my screen. So that means starting on the 25th, which is the current day, we'll have the current day plus 2 whole days before. So this is what I've got this morning. And now, far clearer than yesterday, we clearly have a downtrend going here. Yesterday, there was a bit of uncertainty as to whether or not it was a downtrend. Today, there is absolutely none. Clearly, price is trending to the downside. So from here, that means that I now know I need one break down for us to have a valid bearish setup with a bearish trend. So all I will now do is wait to see one, as long as the trend, of course, does stay bearish, which in this case, it is. So price is still bearish. And what do we have? We've had price breakdown because this candle clearly broke out, breaking all these lows. Now, price has, if we map the structure on, because this is key here, price has formed a lot of small structure here. This is as per the rules in section 1 of the course. I'm not going to go over these all again because you can watch those videos if you need to. The price is then broken out. So the thing that some people get wrong is here they'll see that we've broken, this is the lowest point. That is not a level that we'd trade from because this is not the recent structure. We mark all this recent structure so that we can trade it. So the most recent low that was broken is here, this low. Remove all this now for ease, but this low here, because this is the low that was just broken by this push down. Because of that, I'd be looking for price to retrace up to this level. Let's look if we've got a detest zone first. We do clearly at the top because there's no structure on the push down, no structure broken down on the 5 minute. So we have to use the start of the structural push deep test zone. And from there, I'd then set my alert just below the level and see if price comes to retest it, which it does, and see if we continue down. Now, in this case, you can see price instead breaks up. We didn't get an entry anyway, so there was nothing wrong there. You'll see why when we go into the entries videos. So I would then remove this drawing and wait for another setup. We've now had one break up, but I know that there's an overall downtrend. So let's see what happens with the next structural break. It instead breaks down again. I've got an overall downtrend, meaning I only need one break of structure down for me to have a setup. We've now got that, so I can draw my level on again, because this was the most recent structure that was broken by this breakdown. If I check the 5 minute, I see this deep test zone. Again, this is because of the wicked structure. It was cleanly broke to the downside when price pushed down. You can watch the deep test zone video for more info on that if you need. And then again, I would set my alert on this level for if price pulls back. It does then pull back straight away. We retest this time and continue to the downside. So that is the analysis process with trending markets. It's very, very simple. The key takeaways are, if you have a clear trending market, you only need one break in line with that trend in order to take an entry. You can take counter trend trades. We'll go into those as well later, but you would need 2 breaks in one direction for that to happen. So for example, if we are looking at this as a downtrend, which it is, if, for example, when price first broke up here, which we just talked about, if price just broke up here, which it did, then formed new structure and broke for a second time, then we could look for buys, because yes, it is counter the overall trend, but we have enough recent trending structure from these 2 breaks up to give us a buy setup. So the only ways to trade a trending market, and this is why they're a little different to sideways markets, are you can have one break in line with the trend and have a valid setup, or you could have 2 breaks going against the trend, and these are consecutive breaks. That's the key part. A common mistake that traders make as well is before the second break, they might see, let's remove this. They might see something like this happen, where price breaks down and then breaks up. That's not valid because these are not consecutive breaks up, because there was a breakdown between them. There would need to be consecutive breaks up for us to have a valid buy setup in a bearish trend, or vice versa. We would need 2 consecutive breaks down to have a sell setup in an uptrend, but these are much rarer anyway. The key takeaway is that if you have got a trending market and you have one break in line with that trend, you can look for a setup there. So trending markets are the most simple. I'll get into the analysis process of sideways markets next.